The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. I'm one of those people hanging out behind an emoji. So you got to keep this in mind. This is my opinion. Do your own research. Honor whatever tradition, school of thought you're in, whether that's fundamental analysis. Y'all know how I feel about that, especially if you're practicing it minus or technical analysis. It's dangerous. But this is just my opinion. See, getting pretty good numbers in here now. I don't get huge numbers. You don't blow up the spot talking about financial stuff. But glad to see you here, Sheed. We here, Solo TV 84. What's up, brother? You should definitely check out the Bitcoin video I posted earlier today. I'm not anti-crypto. Just keep that in mind. I'm just going with what the charts say and what the rules of Elliott wave theory says. So it's not a pretty forecast, but check it out. Take it with a grain of salt. Keep it in the back of your mind as you watch Bitcoin trade below that blue line resistance I put on that chart. So y'all need to check that out. Good to see you here, Gold Professor. Julian Brown, welcome. Art New Style, what's happening, brother? Let me go on and stop the screen share and get to the goods so we can get back to regular manosphere fare. Ain't nothing wrong with the entertainment. Gotta get a balance, and I see y'all doing that, so I'm happy. I'm pleased with that. Cause y'all see me in the same effery spots on these streets, because we can walk and chew gum at the same time. We work and we play, so ain't nothing wrong with it. What I have here on, let's see, the S&P 500 has pretty much been falling since the beginning of the month, just before what would that be, Labor Day. The S&P 500 is important because most of I would say, no, I'm gonna say everyone's retirement account is ruled by that. I'm being absolute because we have so few choices in our retirement accounts that is pretty much an S&P 500 fund. If you read the description of where your money is invested, read the profile description of it. If you don't know, you can go to this site, barchart.com. Look over the material you get on your statement and write down the symbol number of where your money is, and come over here to bar chart and put that number in that symbol in the search box, and it should come up. And then along the left spine there should be something called profile, and you can read it, and it should say what it is. It's going to say something like large cap U.S. stocks, and that's pretty much the S&P 500. So the retirement account, or America's retirement accounts, is reflected in the price action of the S&P 500. I see you, brother Steve, say I need to put up more video. Okay, thank you. You said my older videos age well. Yeah, I try. But hey, man, get on that Patreon. I don't want to mention the low price of my Patreon. I don't think YouTube likes that, because that video I did this morning, man, I never had no video with so few views. I think I had like about 2 hours later, I might have had like 2 or 3 views. I'm like, whoa, I never had anything like that happen. That's such a small number. I mean, usually my channel don't blow up, but within a couple of hours, I routinely get about 70, 80 people, and then it kind of tops out around 100, 120. That's kind of about it. But I think it's because I mentioned my Patreon amount, and I'm not gonna do that no more. Okay, YouTube, I got you. So anyway, I'm just kind of looking over here in this. One of my favorite sites is barchart.com. It has something for everyone, whether you're a fundamental trader, a technical trader, whether you trade penny stocks, crypto, it's got something for you. And this is the best free information, I think, on the internet regarding stocks. It's got news, whatever you want. And then, of course, you can pay and get even more. But the free stuff is so amazing. Even on the technical side, they do scans and screens to help you find what you're looking for. And it'll make you lazy. You won't even do your own screens. You just come over and use theirs. Okay. So it's just about, if you know how to read a chart and stuff. This bar chart, the information on bar chart, they just about hand you the money. You know, if you know the questions to ask or know what to look for, they just about hand you the money. So I'm waiting for this thing to update. Took away my information. So what I was saying is that since the market has been falling for the last month, the first thing I want to do generally is see what was most affected. Now, I am principally a ETF trader when it comes to stocks. I generally don't like buying individual companies because it's just my personal style. One, because stocks trade within industries and industries trade within sectors. So whatever the direction of the sector in the industry, the stock is pretty much going to follow that. So stocks don't trade as like individually; they trade with their group and with their pack. So a dog company in a hot industry can go up and down with that industry. And I'm just too lazy to be doing all this research on individual companies, and I'm a technical trader anyway. So the way I protect myself from not getting into the mud of knowing all the who's the CEO and if anybody's suing that company and all that stuff, I get out of that by investing in ETFs that are in a hot industry that I like based on the charts. And so that's how I do it. So when prices say gone on say a month-long decline like they have now, I want to know which industry-based ETFs were affected most. Let's see, performance 1 month, percent change. Now some of these. So what I'm going to do is look through this and see which, based on my understanding where the dollar is and where we are just in the whole trend of things, which ones is likely to pick itself up out of the mud. I'm going to tell you right now, I'm against everything that's metal and energy. Anything that's, oil, natural gas, coal, any of that. Because a strong dollar just destroys all that stuff. And I am very dollar bullish, which was guiding my post this morning about Bitcoin, because we're about to be in an extremely dollar bullish environment, and that's going to be pretty bad for energy, metals, and possibly Bitcoin, likely Bitcoin. I say it that way because there was a period where Bitcoin was rising with the dollar, but it doesn't look like it wants to continue to do that, but we'll see. Anyway, back to this. Let's see what hurt the most. Like I said, I think natural gas was down. This particular ETF was down 41% over the last month. So I'm sorry, this was a short. So that means during the last month, natural gas had a little rise, and I'm saying I'm more likely to be looking at this in terms of something I might buy, because my bias is short energy. Okay, so this is something I'll be looking at later, but I'm looking in this list to see what drop that might rise, which is likely to rise. I'm against metals. So this gold miner is 3 times. So gold popped. No, I'm sorry. No. Gold went down. I think it's going to continue going down. I think the rise in natural gas is to be faded, because this was a short against natural gas, which lost because natural gas went up. But I think this thing is likely going to rise. But let's see, oil and gas. This is a bet against oil, which lost money, and I think this will likely rise. But that's another video, for another time. Let me see. Yeah, silver, of course. I'm bearish all this stuff too. I think that stuff is likely going to keep falling. Let's see what we got. Brazil is very oil heavy, oil controlled. Their oil company, their major stock market seems to track their major oil company. So if I'm bearish oil and energy, that would make me not really want to touch them. Let's see. Let me see. Got to be home builders. There we go. Home builders and supplies, 3 times leverage. This is a nail. That's a candidate. Let's see. Another way we can do this is you come over here. I'm gonna go pull the industries directly. Industry performance. How about I do that? Or I'll get there even. Let me do it this way. The sectors. Where did the money go? In the last month, where did the money go? Let's follow the money. When you are trading, investing, whatever you want to call it, those 2 words, don't get hung up on them. Everything bought is to be sold at a profit at some point in the future. Doesn't matter if you held it for a day, a month, a year. At some point, that thing's got to make money. So it's a whole lot of bad trades out here people call investments. Don't get caught up in that. All right. So this is a picture of the S&P 500. The S&P 500, the 500 largest stocks traded in America. And these are the sectors that they're in. And this is the performance over the last month. So energy made the most. Now here, when they say energy, I bet you they mean, oh no, yeah, this is oil. I think they got utility as a separate sector. Yeah. This is one I would be interested in, because the utility companies, your provider of your electricity, they buy energy. Okay, so the utility company is a customer of the energy sources. So cheap energy, cheap oil, cheap gas, cheap coal, and a stronger dollar would make all those things trend towards being cheaper. Those things getting cheaper would increase the profitability of the utility companies. So that's another video for another time. but this is just so the energy stocks, like we were looking in that list of ETFs that showed natural gas and oil, had a nice little rise over the last month. And because I'm dollar bullish, my bias is to fade this. So I'm saying that this pop in energy is fake. It's going to give it back. That's just this. Again, this is just my opinion. Okay. Let's see what went down artificially that should rise. I just said utilities is near the bottom, so that's one of them. So I would be combing through here for bargains if I was, looking for individual companies. But for me, I'll be looking for ETFs, to cover this. And this communication services, because this is where we start to get into the tech stuff. And I am bullish this market per the title, and I will be making my way to the S&P 500 charts. But one of the big drivers of that uptrend is going to be the tech stuff. And this particular industry took a little beating. That's not a big beating, but it went down more than all the others. So I would be looking here for some bargains if I was looking for individual companies. And materials. Let me see. Let's take a look at the most beaten down group. Come on. I got too many tabs open. That's one of the hazards of being a technical trader. Got a lot of charts up, and that stuff just kills the RAM. Okay. And StreamYard is greedy. Okay, there it is. So just like before, let me go to performance, and I want to see the last month. Just a general idea. I'm making my way to some charts. Okay. I want to know what hurt the most in the last month. There it is. Nucor. International flavors and fragrances. Eastman Chemical. Dow's definitely an old head. Freeport McMoran. I don't know about this one. This company has is gold miner and copper, principally known as copper. But you got some stuff here. Let's look at Nucor and see what the heck that is. And remember this, IFF, International Fragrances. Oh, come on. Okay. It should say profile. Nope. More data. They just added that. That's not what I want to see. Trying not to leave this page, but let me go on and do it. This thing dropped 16% in the last month, and we saw from that little snapshot in an otherwise strong trend, it had a pullback of 16%. Just again, this is just purely technical driven, and so for you folks that like buy on the dip, within the context of technical analysis, you can do that. And so this is one hell of a dip. This is a 16% dip. Let's see what this company does. Because I want to make sure I'm not getting into any oil, energy, anything I think that would be negatively affected by a rising dollar. I don't want to mess with it. That's my macro thesis. the dollar is going to go berserk. Let me see, where's the profile? It went to this other thing, went to options. I clicked this. Must have they call that a fat finger. So that's what the fundamental folks say when something happens on the price chart that they didn't think should have happened. We don't get into that in the technicals. God, man, this thing is slow. So I'm gonna get off once I look at this little section. I'm gonna get off of here because it's really trying my patience. I'm an Aries. We're not the most patient folks. Okay. Blast furnace, rolling mills, produces raw materials. It's got representation in the 500, the 100, and the 3,000. So they got small caps, mid caps, and large caps. A steel producer. The steel is one of those things. It's dollar sensitive as well. I wouldn't mess with it. What was that other one? Was it IFF? Yeah, it was. Yeah, this sounds like some good old retail stuff or international flavors or whatever. I wonder if it's a food additive thing, which would be right perfect. Staple, organic chemicals. Yeah, this got my attention. Creates manufactures flavors and fragrances for the food, beverage, personal care, and household product industries. Let me see what this chart looks like. Never seen it before. But they had a nice little decline. So let's see if there's an opportunity. But I think I made my point already that the industries that dropped the most was utilities and this materials sector. So that's where if I was buying individual stocks, I would look in those two places to see if I could find something from a technical standpoint where the trend seemed to still be intact, and this pullback is logical within, I would say, from my perspective, from within the Elliott wave context. I mean, I can justify that decline because it looks like a wave count that I can label, something that should have been expected. Okay. So if it doesn't make sense, if wave count doesn't look logical, I wouldn't mess with it. And what is this? Okay. This is a monthly chart now. This thing has been rolling since 2009. I'm trying to see if any other information is to the. Actually, it's been running since here. 2000. That's about when gold. This thing been going for a while. Okay, so this thing is pretty much seems to be tracking like the S&P 500. That's what it seems to be doing, and that's a good thing. I like the look of this already. One, the price started from the lower left end of the screen going all the way up to the right. We going all the way back, 20, 30 years. Okay. So this thing, it didn't take out this high, or did it? Let's see. This high says 157.40. And this high says 157.08. Didn't quite make it, but this wave structure looks like it wants to continue going higher. So this would be a candidate if I was buying individual stocks. But like I said, I'm a ETF guy. But this is the bottom. This looks like a wave 1 and 2. And looks like it's still in a wave 3, which has a good bit to go. So yeah, I would be interested in this. international flavors and fragrances. But back to the S&P. Let me go to the daily. Let me check over and see if y'all still rocking with me. See if I like bored the hell out of everybody. Y'all still with it? If you're hot on the dollar, it's TATLT. I'm gonna bring up TLT. I get them confused because one of them is the inverse to the other. When I look at the chart, I know I think my answer is going to be yeah. I might be with you on that, but hang in there. Julian Brown, yeah. Check check the Patreon. Click the link. Let's see. And John Thompson, if I join your Patreon, should I start with your first video to learn? You're gonna learn everything. I'll give you specific things to watch. Well, as soon as you join the Patreon, I'll give you some specific stuff to watch, but you can still have dialogue with me. I have group and private training, and you're going to start learning, technical analysis right off the bat. During the week, almost every day, I post something about like what the price chart of, say, the dollar or the S&P 500 is doing right now. And setting targets using technical analysis. There are other people in the group that are pretty good, and they share information as well. So yeah, it's not just me. I also point people to excellent videos on YouTube, because there are some outstanding traders on YouTube, but then there's some questionable ones. So you kind of need somebody to say, okay, listen to what that person says right there, and this person, and not so much leave them other folks alone. You kind of need somebody to do that, to cut years out of your ordeal to learn this stuff. Okay, so that's pretty much what I provide. So there's other. I'm a big fan of free information, so you got to pay my minimal fee so I can direct you to the free. Okay, because as y'all know that this stuff costs, some places charge $10,000, $20,000, $30,000. I'll say the more median price is around $1,000 or $2,000. I can't mention my low price because YouTube don't like it, but I can save you thousands. Okay, all right. There's a lot of good free information out there, and if you don't have to pay really anything beyond the minimal that I'm charging you, but there's other stuff out there that you may choose to pay for. That's very minimal. We're talking $100 or something like that. But I'm not saying that it's necessary, but you might choose to. Some people benefit off of let me see, back to where I was. Let me get back to the chart. Okay, we're on the daily chart of the S&P 500, and in technical analysis is an umbrella term. There are many schools of thought, flavors, 31 flavors of technical analysis. All right. And no one, very few, if anyone, knows all the forms of technical analysis. You don't have to know all the forms. Many people only know one form, and it works within. As long as even if you just know one type, if you follow the rules of that one type, you'll be fine. But the more you know, the more things you can trade, the more questions you can answer, the more difficult things that come up that you'll be able to resolve. So more is better, in terms of knowledge. Now in Elliott wave theory, we count waves, because the premise in Elliott wave theory is that prices, they trade in cycles of 5 waves up and then 3 waves down. And so and inside of each of those, like, you got a wave 1 the up waves are waves 1, 3, and 5, and the down waves are waves 2 and 4. And so inside of the 1, 3, and 5 wave is 5 waves, and inside of the 2 and 4, it's each has 3 going down. So, and the price trends in a diagonal channel. And so when we came off of this bottom in March, the move was so aggressive. What typically happens is you trade off of the bottom and you come back near the bottom, and without making a new low, you go higher, but you typically come all the way back down here. It didn't happen. This thing just kept going. And if you go back to the library of what I was saying in this time, like I thought maybe this was going to roll over. This is what freaked me out. I think it's in my, I don't delete any videos. So if I make a mistake, it's there. I do have mistakes. Okay. It's in there. And I explained the logic in real time. We in the Patreon, in technical analysis, we're always updating what the price, our opinion based on what the price is doing. Now, critics of technical analysis says that makes us arbitrary. And I'm like, that's not even logical. You go to the doctor and the doctor updates his opinion about your condition. You know, he says, take this medicine, come back in a couple of weeks or month, and I'm going to look at you. Then I'm going to make a decision then. So, I mean, you don't call the doctor a quack. You know, so we're always studying what's going on. So the idea is that there's people with big money in the market, and they control the trend, and we, the guppies, are just along for the ride. But there is a psychology, a mass psychology of how humans work. We're sort of like ants in a colony. And there are patterns to how we do things, and Elliott wave theory in particular studies those patterns. Ralph Nelson Elliott discovered certain. This is back in the 30s, discovered 20s or 30s, something like that. Some patterns in price behavior, and so a link was made between price behavior and collective human psychology, sociology, I guess, if you will. So that's the short of that. But we were looking, when this down move didn't happen, what that suggested was that we were in an incredibly bullish trend. And right in here, when I said, okay, well, maybe now, because it seemed you could see you got this top here, now it's kind of going sideways. So I'm saying, okay, it looks like it's running out of gas. Maybe now we'll get a retest at the bottom. Nope, it kept going. And so if you look back at my library, right around here, that's when I started saying, wait a minute, because I was bearish. I thought this thing was going to keep going down. And I said, because of the way this thing kept rising, and especially when it went higher right in here, I said, okay, we're looking at something different. And so the only time we had anything that looks like a retrace, the closest to it would be here. So this, we had a nice little channel going up, which was bullish as hell. And it was freaking a lot of technical people out, in the sense that you don't usually get a run this hard off the bottom without retesting the low. That's rare. But we got our 5 waves. 1, 2, 3, 4, 5. We got our 5 waves. And then this is wave 2. This retrace here is wave 2. And so what it says is that oops, I'm wrong. No, that's a fractal of it. That's not the whole thing. This is the 5. This is it. And it's 1, 2, 3, 4, 5. That's what it is. And then it came here. And this, having a pause that went, we didn't get a pause, a pullback, until we made a new high. So the prices fell in February of 2020 to March of mid-March of 2020, and we bounced off that bottom, and we didn't get anything that looked like a real correction until after we made a higher high. So the price rise above this former high, which preceded this pessimism, basically this optimism, where the price went higher than here, this optimism invalidated this pessimism. Okay, so we made a higher high, so that means the trend is continuing. So there were no bearish people at this point. All the bears, and I was one of them. I think somewhere in here I stopped being bearish, but all of the bears got shot. Right in here we got shot. Like it or not, we had to change our mind. Now, getting past the part of being wrong and having a, eat a little crow, the attention turned to the shallowness of this retrace. Again, what I said earlier, when we get a retrace, like this would be a wave 1, and this would be, the retrace would be a wave 2. Remember, the 1, 3, and 5 go up. But we didn't get a wave 2 that came all the way down here. This is all we got. A little weak ABC, little weak, measly little pattern, right? That's all we got. Okay? So that suggests that we're in an especially bullish trend. And then this thing ran from here. Look how far it ran. And so on Patreon, we were discussing this a lot about patience, because this thing is huge. We were discussing it all in here. Patience, this thing is huge. And then when we got to this pullback in the beginning of September, I was thinking about this pullback here and this channel, and the fact that we don't really have a 5 count yet. And in Patreon, we discussed the idea of this trend line holding. Well, this moving average is functioning as a trend line. This is support for the channel. And we said way back then on Patreon, discussed it, that this low would hold. And like I said, all of my errors are on YouTube, on Patreon, but so are my successes. So it's all there, okay? It's all there. And so this low held, and I think it's going to continue to hold. But confirmation really would be getting above this, and final would be making a higher high. So that's the daily chart. That's why I say the downtrend is over, because we had a swing here, and we came down here, and this low was not taken out. So this is a typical, what I was saying that should have happened way back here, where you stop, where you bounce off the bottom and you come back towards the bottom. Well, that happened here. It happened here. So we got this bottom. And this long wick here, that means price rejection. It means the price fell and the market said that's too low and bought it up. So a long wick, sometimes called a tail, that's price rejection. So I could see it in real time that the price, as it threatened to get near this, what I projected would be a boundary, the market confirmed it by buying the price back up. And it has not come back down in this area of price rejection right here, creating that wick. So the price flashed down there, and big money came in and said, nope, that's too low. And it has not gone below that since. So we traded up, and as I said, usually you come back down and retest the low. And this is about right. It came down, and now it looks like we're trying to go. Then we're going to go to the 5-minute and wrap this thing up. So this is that same moving average on a 5-minute chart. It just happens to make sense at this time frame, but just coincidentally. Okay, come on. My computer is acting janky because, like I said, StreamYard is greedy. Daggone. Okay, this is the beginning. Come on. My patience is being tested. Okay. I'm about to butt heads with this computer. I'm gonna ram my head into the damn screen if this thing don't stop. All right, so this is about where we fell off. And this is September the 3rd, Labor Day. And you can see even this is that area on that this is that price rejection thing we were talking about. All this with the wick, and they bought it back up, and this is that low area where we pretty much can't really go below it, and so it's making a higher low, and I think we're gonna hold. I think this is gonna hold. So we always use stop loss. I would definitely get out of this trade if price went below this. I would run like hell from the S&P 500 if the price went below this low. The low from the 20th. Is this the 20th? Yeah, the 20th. So the 20th was what? Last Monday. Wow, okay. Yeah, so that says a lot too. So we hit this low 9 days ago, and it has held that long. Now, if people were really trying to run out of this building, get out of this burning building, this low would have been taken out. Okay. So it looks to me like I can see 5 swings here. I wanted to show it on, is it a 4-hour? Oh no, I think the daily shows. Let me try 4-hour. Maybe it's back to 5. I don't see it. It's not. I'm trying to get something that shows you the count that's really, really good. Oh, this is nice. Nice little doji right here. Needs to stay above this. That would be great. But it can go a little lower. As long as it doesn't go. Oh, I see what I wanted to see. I got it. All right. So we may have to swing up. And this looks like an A, B, C right here. And then we got this little sideways move here. And this low seems to be holding. Seems like we're not going nowhere, but we'll see. So that's it. That's all I got. So we're concentrating on this low here. If the price goes below here, I'm wrong. And even worse than that, we would likely go a significant amount lower. I don't see that, but we'll see. I don't see it because of the shallowness of this retrace, and we getting this sideways action right here called consolidation. And so prices only go up, down, and sideways. That's all prices can do. It's one of those 3 things. And between up and down, you typically get a sideways. And so that's when money that was short become long. So it creates like an equilibrium when the people that were sellers become buyers, and then new people come in to buy on the dip. And so that creates a sideways movement before you get the up movement. And technical analysis is watching. What we do is we watch the price levels that the market respects, because the stock market isn't, I'm not going to say the stock market. I'm going to say financial markets, because I mean to include all of them. It doesn't matter if it's stocks, uh, forex, cryptocurrency, futures. It does not matter. The financial markets are auctions. That's all it is. It's auctions. And people are psychologically committed to price levels. You know how much Jordans cost or certain things cost in the mall. You have it in your mind. You have an opinion about what a good price is, or when the price is too daggone high, or when something's a bargain because they put it on sale or put it in the cutout bin. You have an opinion about these price levels, and you are not alone. Well, when it comes to financial assets, the market has a similar thing. We have an opinion about what's too high or what's too low, and you learn to interpret that by looking at how price will respect certain levels as the floor, like the bottom here is respected here for some reason, or like when I showed you on that wick, when the market bought it up, brought the price back up, it said that's too low. Well, so now the market seems to hang around this level and say that's what we think the value is, and I'm rocking with that. And so that's why with technical analysis, we watch what big money does as opposed to um, news, earnings reports, because all that information can be massaged. We know that CEOs and chief financial officers at companies, they're humans, so that means that they lie. Okay, humans lie. All right, but price is truth. Okay, price is truth. And that's the basis of technical analysis. We are governed by what people do and not what they say. We follow the money. Let me take check out the chat and get on up out of here. All right, let's see. Yeah. Let me look at that TLT. I think I only got 5 people. I done ran everybody out of the room, but but I'm gonna still look at that TLT. Okay, that looks good. Nice base going up, but let me see what okay, let's look at it again just to be clear about, it's the 20-year treasury bond. That's what it is, okay? And the TBT, that's what I get them confused. The TBT is shorting the 20. So the TBT is betting against the 20-year treasury. Okay. TLT is the long version. So let me see a monthly or something. Give me it. Okay. Now, okay, what this is, over time, the interest rate over time. I'm talking about a span of time that's relevant to now. It's like the early 80s. Since the early 80s, the interest rate on bonds, mortgages, and the like has been trending down. And a treasury bond is a loan from you to the federal government. So you're the bank. You loan the federal government money. Okay? If you're buying a bond, that's you loaning. Let's say the government wants to build roads and bridges. Y'all heard that in the news about the Biden, the bill that they're gonna, the infrastructure bill. Well, that's gonna show up as a whole lot of bonds being sold, which is debt obligations of the federal government. You buy a bond, so now the government owns you, and so this 20-year bond is like old paper. These are bonds sold long ago. And so these bonds sold in the past, when the interest rate was high, when now interest rates been trending down. So it makes that old paper that's coming towards maturity, it's making that paper more valuable. So that's what this is. This is the value of how a declining interest rate environment increases the value of old paper. Think of it that way. So that trend is going to continue. The trend of old paper going up in value is going to continue for as long as the interest rates continue going down. And I'm saying we're near the end of that interest rate going down cycle. That's not going to continue. Okay, so when that happens, it's going to cause a huge shift in the flow of money. So a lot of money is going to back to that TBT symbol I was talking about. The TBT, if I put it up, it'll be the inverse of this. So money will flow from this side of the seesaw to betting against this, betting this falls. That'll be the TBT. And that would mean that money would also run from the stock market to buy the new bonds created by the government. So back to that infrastructure bill. Okay, so where we are in the interest rate trend cycle with regard to this huge infrastructure bill bond sale that's getting ready to happen, that's going to be key. It's probably going to sync up just right with the end of this Elliott wave count for the S&P 500, because I would not be surprised if it didn't happen like exactly at the moment when we're at the top. And according to Elliott wave theory, that I would then be saying that the S&P 500 we need to run like hell, or something like that. I think when we get to that point, I think that interest rates will clearly be in an upcycle, and the smart money will rotate from stocks to these bonds. The new ones coming out now that will be trending up, because the interest rate will be going up, because those bonds will be more profitable, more valuable month over month or quarter over quarter, because we'll be in a rising interest rate environment. Well, in a declining interest rate environment, bonds issued in the past increase in value. In a declining interest rate environment, old bonds increase in value over time. And in a rising interest rate environment, newly issued bonds grow in value, increase in value month over month, quarter over quarter, and the old ones suffer because the spread between the old paper and the new paper gets narrower. The old paper that's up here in the nosebleed section starts to lose value, and let me look at the TBT, and so the TBT would be, think of it as the new paper. Bonds it's like kind of really confusing, but just think of it as old paper, new paper. That's the way I think of it. And so if this thing really takes off, And I am watching this thing. Let me get this moving average off the screen so it can stop messing up the scaling. So there is a chance, concern. I need to be watching this. Now, is it going to go up a little more, which it might do, or it may flip and go lower? So this going lower corresponds to the TLT going higher, put it that way. All right. So that's a whole nother thing. But the dollar, typically, generally, the dollar and the interest rate trade together. So a rising dollar is the interest rate rising and the dollar rising. That's common. Okay. All right. So that's something that, we technical traders would be looking at too. Because in that equation is also the value of gold and energy. So that's the main macro complex. If you can apply your technical analysis to the trend state of the dollar, the interest rate, and energy and metals, you got your finger on the pulse of the world. You are trading the global macro at that point. And that's what I try my best to do. And that's why I'm called Dollar Will, because I'm looking at that complex. And then I make my trading decisions based on the trend state of the dollar as it relates to something, the things like energy and metals that the whole world needs. So, our industrialized economy needs metals, the precious metals and minerals from the earth, and energy. I don't need to study anything else. Okay, as long as we have lights and live in modern homes and use the electronics, we still going to need energy and metals. So I don't need to really study anything else. And every country that has homes, cars, fancy electronics, we consider those modern developed economies. And countries without them, they're called third world. All right. So, and everybody wants to be developed for the most part. We're not talking Quakers. Okay. Everybody wants to join the party and join the developed world. And trading things that are sensitive to the dollar keeps you right on the pulse of growth. Okay, that's it. That's simple. All right, what's up, Devin Liggins? Yeah, it has been a while, man. It has been a while. But yeah, research the TBT. Right. It's just you gotta look at that bond interest rate when you're looking at the TLT and TBT. Look at the yield, basically yield. Look at yield charts. Go back to at least 1983, and you will see interest rate downtrend, yield downtrend since like 83, early 80s, all the way to now. And that has fueled, that downtrend has made stocks, the stock market increase, because that's cheap money. Everybody knows about other people's money, so you're supposed to borrow other people's money and invest it in something that appreciates. All right. So that interest rate getting cheaper is allowed you to buy or get a loan at an affordable rate, get a car, a house, start a business. Let me take a car out of it because that didn't appreciate, but a house, a business. So cheap money, that's like, the fuel for the economy right there. And, of course, that gets into the whole credit relationship between credit and fiat. So it all has to do, it's got to be cheap. It's got to be a bargain. So yeah, so when you study that TBT and the yield trend and the trend of the dollar, you'll a lot of things will make sense to you, and you won't need to you won't need to rely on news and other people's opinion about what's going on. You can see it. You know, once you learn how to read these charts, you can see it, you know, and nobody will be able to tell you ever again that, you know, the price dropped or it popped because of an announcement that somebody made. You will never fall for that crap again. Okay. So, or some extended clips. Somebody here with the name technical analysis. What's happening? Is your game tight? Technical analysis? I mean, with a name like that, your game got to be tight. Name got to be tight. Anybody still rocking with me? Let me see who the five. If you one of the five still here, put a one in the chat. I want to know who's rocking with me to the end. Put a one in the chat. Let me know who's still rocking to the end. What's up, extended? All right, thank you. Come on now. I see the counter. Oh, okay. So that means that I got okay, technical analysis. Okay, extended class. Okay, you did. All right, cool. John Thomas. Okay, Estiwa. Cool. Cool. 39 train. All right. Okay. I appreciate it. Okay. Portfolio looking pretty good. I am more on the bearish ETF camp right now. That's what I'm concentrating in right now. But I have another video coming out at some point. Maybe I'll do it today. Maybe I'll do it tomorrow. It might happen today, if I got the energy. I'm really liking the what is the cannabis sector. It looks like it just hit a bottom. It looks like you like right early to get on some real good opportunities that you can hold for a while, because that section has got beaten to hell in a wave two, like we was talking about earlier with the S&P, where the price retests the low. Well, that has happened with many stocks in the cannabis marijuana space. So if I got the energy to really do it justice, I'll come back and talk about that and throw up some charts of several of them. But it looks like we in the sweet spot to really be able to get in something in the beginning of a trend. And although I don't like hodling, but this is something that we may be able to hold for a long time, and we may be able to 10x some stuff. Okay. So Steve would say, what's your thoughts on options? I am not an options trader per se. I play around with it. I don't know it enough to teach it. Okay. I don't know it enough to teach it. But options, I'll tell you what, you better know technical analysis, because with options, you not only have to be right about the direction, you have to be right about the timing. Like the option has to not just hit a certain price. It's got to hit a price by a certain day. So that's your tech. You really have to be next level in your technical analysis to consistently win in options. So that is the next natural step. Now, with these ETFs, there's a lot of opportunities with these leveraged ETFs. You can almost get the, I'm not going to say you're not going to get as much probably as options, but you can come close, So I think a lot of people are in the leverage ETFs as a way of getting some exposure to the gains that you can get in the options world. So yeah, I play around with it a little bit, but I haven't really put the time in on options that I have that I've invested, say, in stocks, forex, and futures. But the ETFs they have options associated with them, and you can definitely see uh, a call that you'll make, or I'll make, or somebody will make in technical analysis. You can go look in the options market and see it's a win. So you can use technical analysis to time when you make your options, or when you take your options positions. Okay. Okay. What's up, Achieve Mindset? He says, what do you think about commodity trading? I love it. I love it. What I like about it is you get better, a favorable tax treatment. You pay less taxes on your gains if you are in the commodity market. Now, I am a swing trader. That's what I have been historically, better than average at, trying to be modest. Okay, I think I'm a pretty good swing trader. Better than average swing trader. Since I've had my Patreon, YouTube, I'm trying to become a much better day trader. Okay. So that's a whole, I'm not going to say it's a whole nother thing. It's like swing trading on steroids. So, because the moves happen much quicker. But everything that you learn in technical analysis, it applies to day trading. It's just everything happens in a much smaller scale, faster time. And so I bring that up because once I got into the day trading thing, I started with I'm still a lot mostly in forex, but futures, the money comes faster. It's like it seems like you can be in a position a shorter amount of time and hit your mark, hit your money goal. So most of the training, so everything in technical analysis still works, but there's a psychological component to trading, huge psychological component. And one of the biggest things that people will contend with, like if you come to my site, I would say after a month, you'll be absolutely convinced that technical analysis works. You won't doubt that. And several months in, you'll get very good, or not very good. You'll get decent. You'll be decent at making these projections and these calls. But because we're in a community, you get feedback. You'll get better. But then after, I would say 6 months, you're probably going to have learned most of it. The rest is going to be psychology. More specifically, controlling your greed. Greed. Okay. And the greed part, I never had a problem with it as a swing trader, but a day trader, that's where my greed issues come out. Because you can make money real fast, but because you make it real fast, you don't respect it. And so you start thinking, well, if I made this amount, if I made, these $500 in 15 minutes, well, what if I traded for an hour or two? Well, no, you're getting ready to give all that money back and some more. That's what's getting ready to happen. So day trading has challenged me to get my greed under control. Okay. If you want to start learning it, technical analysis is technical analysis. I'd say go to CME. They got Chicago Mercantile Exchange website, and join my Patreon. Okay. Because I'm looking at those charts too. And so it's the same rules of technical analysis. So me and a few others, what we're doing in the day trading aspect, we're trying to get our rules and our discipline and our psychology, our greed under control, so that we can trade for these prop firms. These prop firms, it's called proprietary firms. These are firms where you trade their money and you keep anywhere from 80 to 85% of the profits. So 15 to 20% will go to the house, 80% go to you. But your game has to be tight. You know, if you break the rule or lose too much, you're fired, period. No probation, you're fired. Okay. But if you get the discipline down and apply the rules and again, be disciplined, you can make as much as you want. You know, there are people out here working for more than one firm, and there's nothing illegal about it. You're not an employee. And I shouldn't have said working for. Let me say contracted with more than one firm. But the failure rate is 90%, 90, because most people either A, don't get the training, or B, don't have the discipline. But I'll tell you, the greed issue is real. Greed and impatience. The impatience to wait for the setup that you need the price structure to get in before you make a trade, and then that's the discipline part. And then the greed part is when you make the money real fast, can you just exit and turn off the computer and or go watch some effery videos and stop trading? That's very hard. That's very hard. So come on by my Patreon. Click the link underneath the description, and if you found value in this, consider putting this up on your other social media. Help the channel grow. And I'll see y'all later. Peace.